Hello, everyone, and welcome to another edition of Tone Vase Market Analysis. Not much to announce, so we will jump right into it, and I will try and keep this short. So it's Sunday night. Today is November 20th. We're going into a short week of Thanksgiving. Most traders take generally this week off. I barely looked at the market at the end of last week. This will be my week off to try and I don't know, try to make these charts maybe a little more professional, do a little bit of work. I might do a video over Thanksgiving just about fundamentals and economics and economic indicators. So this is a week where there will be very little trading. There should be very little volatility, but you never know. So taking a look, if anything major happened over the weekend, and as you can see, not much. The markets are basically flat. Nothing crazy happened. It's not like a few weeks ago when the markets were up an insane percentage because of Hillary Clinton and her not being charged by the FBI. So nothing is really happening. Gold is bouncing up a little bit. Oil is rebounding a little bit, and the markets are generally flat. And the VIX is also pretty flat. Those are pretty much the highlights. I don't really do any of the other futures. So let's jump right into it. I haven't been talking about the Dow. I've generally been talking about the S&P 500, but because the Dow has slightly separated itself from the S&P 500, I thought I would briefly start mentioning it. So in the Dow, I really thought that this bounce would have a little bit more legs. We came up short of the round numbers. So we were going up. Would have been nice to reach this nice round 1900. We did have this doji, but we haven't really had a real follow through afterwards. So for what we've had since is we have been in this very, very tight channel where we have not crossed above or below the highs and lows of that doji. So we're in this channel. Which way this channel will break will definitely give you a few weeks of momentum in that direction. It can really break out to both sides. A lot of people are taking on short positions here because they think the market has temporarily topped. Of course, some people think that it's permanently topped and we're headed for a crash. I don't. So either thing can happen. It is possible we bounce up a little bit more. And then after that, we have a correction. I am looking for a correction. It's not going to be a big correction. It'll be a small correction. It can happen from there. It can happen from here. How low would we go? Probably not too low. We do have decent support right around here, around 18.6. If that breaks, we have another level of support around here. This is looking like 18.3. And if we break below that, then we are now looking at the 200-day moving average, which would also be okay. So we got plenty of support. I wouldn't be too worried. We did reach an overbought condition on the RSI, and I take these fairly seriously. We missed it here, or we just touched it, but we're now higher here. So things are looking good for the longer term future, but in the short term, we can definitely see some pullback, and I wouldn't mind seeing some pullback, maybe down to the 50, and then we go back up. Okay, so that's just a quick Dow Jones. Now, S&P 500 is slightly different, and the S&P 500 still has not broken out. It's right there. It's right on the edge. So this tells us a couple of things. The obvious one is that Dow Jones is, of course, stronger. And oh, by the way, look at this nice bounce right there off the 200-day moving average. You really like seeing that. But here's what it tells you long term. What it tells you long term is that the stock market, in my opinion, has a lot of upside left. And the reason I think it has a lot of upside left is that you don't get multiple chances to exit an all-time high. That just doesn't happen. You don't get the universe doesn't really work like that. The universe doesn't give you a month to exit an all-time high, and then 2 months later gives you another chance to exit an all-time high. That's not how these things happen. Look at the Nasdaq when it hit 5,000 all-time high back in 2000, and we're barely there now. And inflation adjusted, we're not even close. Same thing happened during the Great Depression back in 1929. It took like 20 years to get back there. And same thing in 2007. That was a double top. 2007 reached about the same height as 2000. And so that was your next chance to get out, even though it was 7 years later. But that's way too short of a time scale for all-time highs. When they happen, we have a bear market for like 20 years, like an entire generation. So that should have been an indication that we're going to be going higher in the near future, at least in a person's trading lifetime, right? I mean, you're assuming a person's active trading lifetime is about 25 to 30 years. And of course, some people trade longer. Most people trade shorter because they go broke. So this is definitely not it. This is not an all-time high, and we will certainly be going higher, in my opinion. And again, Bitcoin also shows that example. Of course, things move very quickly in Bitcoin. When we hit over 1,000, it's now over 2 years later, and we're still not even back there yet. We're still like 25% under. Same thing in silver. When we hit 50, it's now, what, 5 years since that happened? And we're not even close. We're at $10. Gold, 1900 in 2011. Same thing. It's been 5 years, and we're not even close. And I think we're going even lower. So, I mean, you don't get multiple chances to get out. So this tells me that we're certainly going higher. But in the short term, just like the Dow, it would be nice to see a pullback. Of course, unlike the Dow, the S&P 500 has not reached an overbought condition, but the S&P is not the leader right now. The Dow is clearly the leader. And also, if you look at the MACD, we are trending to the downside. The RSI is about even, and things are starting to cool off. And we're going into the slow period of volatility, so there won't be a lot of buyers. Some people will be taking money out to buy gifts for the holidays. So I'm expecting a nice pullback, but I'm looking at good things for next year. And next week is supposed to be a break week, like I said at the beginning of this video. So that's my view for the S&P. The S&P is my favorite index to judge for everything, which is why this will be the only one I will take a peek at the weekly chart on. Let me see when it updates. Yeah, nothing is jumping out at all. The MACD is starting to turn up. The RSI turned up a little bit. Again, nothing spectacular. We're right at the all-time highs. Yeah, it can go either way. It could be choppy. And like I said, we're entering a very low period of volatility. So I'm not really expecting much. The NASDAQ has surprisingly been the lagger. I really thought that the I really thought that it was going to. Let me draw an arrow. I really thought that the Nasdaq was going to lead us lower, but then the Dow Jones took over back to the upside. So tech has just been lagging, but what you have to realize is this fall over the last few weeks, it's really been driven by a few stocks: Nasdaq, Google, Netflix, Apple. Just those stocks have been taking a hit, and I trade the Nasdaq, so I'm very familiar with those stocks. I trade the individual stocks in the Nasdaq, and the big boys have been taking a hit. The small guys have held up really well, but it's really those large cap stocks in the Nasdaq that are taking a hit. I'm not exactly sure why. I know Zuckerberg came out against Trump. It really surprises me how a lot of these entrepreneurs that started companies can be so socialist. But they came out against Trump. That probably hurt their stock. And Meanwhile, what Trump will do for these tech companies is great, because they'll probably be able to bring all the money they've been, I don't want to say hiding, but all the money they've been holding on to offshore, they might be able to bring that money back under cheap tax conditions. Okay, so that's pretty much it for the Nasdaq. Let's jump straight to gold. Oh man, and gold took another hit. So of course, I've been pretty bearish on gold. There was a small period in here where I was bullish, and rightfully so. And I talked about this ridiculous spike in the last video, so please check that out. So let's see, what are we going to pay attention on this chart? Well, obviously, we are 1 day away from the death cross. As much as I'm bearish on gold, and one of the things I always say is be careful with these death crosses and golden crosses, because price likes to move into the cross and then fall. So one of these, right? So this is very, very likely. I might have drawn that green arrow a little too high. I don't think if gold rebounds here, I don't think it would rebound all that much. I think it will. I think this right here is major resistance at 1250. Also, if we slowly creep to 1250, that could give it enough time for the 50-day moving average to fall that much, along with the 200-day moving average to turn and start to trend to the downside. Now, on Friday, we did put in a reversal candle. Should make this green. And we avoided a catastrophic close below 1200, which is a nice fat round number. We have also reached the oversold condition once again, which is a bullish sign. We reached it here as well. And if we rebound on Monday, and it looks like, wow, this is brighter than it was earlier. What happened here? Well, this is interesting. So this is, okay, this looks like, I can only assume this is a glitch, because unless something completely insane happened in the last, yeah, this has to be some kind of a glitch, those that are watching this live, because you would have seen me open this up. Gold is not up $123, only to put it back at 1211 where it was before. And the S&P is not up 126 points, only to put it exactly where it was before. So, and same thing with oil. So if anything, the futures contracts maybe flipped maturities, and even then, this makes absolutely no sense. There should only be a $10 move, but I've never seen anything like it. So I am going to ignore it, and I'm going to pretend I did not look at FinWiz. It's got to be some data errors on their side. Maybe they'll catch this quickly, and I will refresh. Nope. I'm going to chalk this insanity up to a data misfeed. So now let's get back to gold. So if we reverse on Monday, and it looks like we are, gold is already at 12.11. So if gold can get back above this candle and close around 12.20, I can certainly see a rebound back to the 12.50 area. And what I would then say to people is that it will be very, very slight. It'll be very, very slight, but there will be a slightly higher low on the MACD. I'm sorry, on the RSI, and there may be if we reverse on Monday, there will be also a higher low on the MACD, and meanwhile the price has clearly made a lower low. So I mean, this is where you assume the price is lying a little bit, your momentum is correct, and we'll bounce up, but I do think that gold has way more downside to go. Let's take a peek at the weekly chart. Probably not going to say much about it, other than let's look for our levels. Yeah, wow. So this is, okay, I will talk about the weekly chart. Okay, so let me get the right trend line in here. Let's do one of these. I like this 1200 right here. So I'm going to take the 1200 seriously. It's been support twice. It's been resistance in the past. I should probably draw it insanely thick like this. I hate drawing thin lines. I don't like trading to the penny. I'm a big believer in, giving things leeway. So yeah, so once we go below 1200, support becomes very, very, very limited, and there's really almost non-existent. I'm going to have to pull this way out to see what happened on the run-up back in 2010. Otherwise, this is very, very limited support, and I don't believe in double bottoms, just like I don't believe in double tops. So this tells me we're probably going lower than 1045. But again, we need to close in this area. If we're anywhere near a double bottom, that's a year apart, I'm going to assume we can only go lower. But let's see what happens. Yeah, let's see what happens over the next few weeks and going into year end. I'll leave it there. All right, so oil is behaving as expected. Well, not perfectly as expected. I personally considered this to be a bullish reversal. I was about a week early, and we had a better reversal candle here, and it with immediate follow through. I mean, it was one close for 1 day below the 200 day, and then immediate follow through. We have a reversal candle here, but we followed it up with a strong close. So I am looking for some more upside in oil. We are about to break the 50. The MACD has just crossed. So oil has certainly room to the upside. How much upside? Probably not to break out over the 52. But again, we'll get to that bridge later on. We have to break above the 50-day. And then we have this round number of 50. I'm not a huge fan of head and shoulders patterns. But we do have a high here near 50. If we come back to 50 and turn back down, it will be a head and shoulders pattern. Like I said, not a huge fan of those, but many people are. Yeah, so there's some upside. And after that, I'm not all that bullish oil for multiple reasons I've discussed in the past, mostly because alternative energy is starting to gain ground and the dollar should go up in value. And since oil is priced in dollars, that will make oil price drop a little bit because other countries also buy oil. Okay, so that's my view on oil. I guess I'll peek at the weekly chart. Well, the weekly chart is looking fairly bullish. Yeah, let's annotate. Why not? I'll try and make it quick. So the weekly chart is looking kind of bullish only because of the 50-week moving average. And we also had our bounce here. Again, this is why I try never to trade intraday prices. I always look for the close, and it pulled back all the way to the 50-week. It maybe closed a smidge below it, but then the next day, your bearish trade would have been blown up, and you would have immediately got either stopped out or you would have taken the bullish position. We are certainly in a channel here between 50. I'm just going to round off. Between 50 and between, again, I'm going to round, say 41, 42. We are being cupped by the 50-week. We are still way undersold below the 200-week. So can we go up above $50 a barrel? Well, we could. We certainly could. But again, this is my absolute maximum for the price of oil it can possibly go. And my longer term view of oil will be something like this. It's probably an unpopular position, but I am looking for something. You know what? Let's do a box. I am looking for something like this. Oh, that was supposed to be a box. I am looking for something like this to repeat one more time. Okay. But again, that's going way out into next year. All right, oil is done. So the reason why I am kind of bearish commodities is because I am bullish the dollar. However, the dollar is getting way out of control. And I might regret saying this, but to me, this is a reversal candle, not a perfect one, but a good enough one to strongly pay attention to. So if the dollar closes below 101 on Monday or Tuesday, again, it'll be a slow week, but it's something to pay attention to. I would see this as a reversal and a dollar pullback. How far would it pull back? Well, the obvious choice to see a pullback would be around the 99 area. That's the obvious choice. The more pessimistic choice would be down to the 50-day, even though the 50-day isn't all that useful when it comes to the US dollar. We are certainly overbought, but we are not even close to turning. So after it turns, the MACD still has to turn. So, I mean, there is definitely room to the downside. I think we are pushing the limits of consecutive updates in the US dollar. So at this point, I would not be long the dollar. I would be looking for a dollar pullback, but I am ultimately long the dollar to break out to new highs. I'm not going to look at the weekly on the dollar at this point because I'm already going on for too long. So the British pound, oh, I don't know why I took the annotation off. So if the dollar is to pull back, I am expecting the British pound to break out above the 50-day and maybe, I don't know, play around with the 200-day. I have been saying that the British pound was very oversold. I would love to see the British pound come up and get to this overbought area and then turn back down. And the reason it would turn back down is because of the strength of the dollar, not necessarily because of weakness in the pound. Now, this is very, very different than my view on the euro, which is a complete disaster. And I can't talk badly about the euro enough. It's probably my biggest punching bag and has been for years. Now, of course, if I am now bearish the dollar a little bit for a pullback, Obviously, the euro will rebound in this scenario, and the euro seems to be a complete mirror image of the dollar. So if the dollar takes a break, I guess I can see the euro coming back to this yellow line. But unlike the dollar, see, the dollar showed a reversal candle, even though that reversal candle needs follow through on Monday and Tuesday. The euro is not showing any such reversal candle because the euro is just a complete basket case. And I'll zoom out to a weekly in a minute. So if the euro does go up, I mean, that's the ultimate future for the euro. I will take a look at the weekly chart just so I can draw my arrow. Oh, no, euro is just bad. Oh, God. Like the further I zoom out, the worse it gets. So again, like I said, I'm not a believer in double bottoms. I'm not a believer in double tops. So what does that mean? Let's get a thicker line going. That means that this channel between 1.15 and 1.05, I guess I have to move this channel up. Well, no, I'm not going to move it up. I'm going to leave this at 1.05, and then I'm going to draw one more line. Maybe I'll make a dash line right here, and we're below this line. Okay, and I am expecting a breakout of this channel, and I am going to take a position. This break of this channel, I believe, will be like this. This no longer needs to be dashed. And I am looking for this to repeat once again, where the euro will go way below parity. Okay, so finally, let's talk about Bitcoin. Again, this is the Brave New Coin BLX index. It's a little bit delayed because only end of day data is displayed on TradingView. The ticker for this index is in the description of this video. This index goes back to 2010. So those looking to make long-term charts on Bitcoin, this is a pretty good index to use. It does factor in one Chinese exchange, which is why the average price on this index will usually be higher than Bitstamp or Bitfinex. If anyone still uses Bitfinex as a pricing gauge, I personally don't. I usually use Bitstamp. And I have been fairly bearish on Bitcoin ever since we reached, well, not so much this RSI condition. We did break out of this triangle, but now that we've reached the objective of this triangle at around 750, I have pretty much been somewhat bearish Bitcoin. We did come back up to 750 just earlier today, but we've now pulled back. I would love to see it come back down and touch the 50-day moving average. But of course, most of my bearish targets on Bitcoin don't get met, though they did meet my bearish targets here over the summer. So I am looking for a pullback. It's possible that it can pull back all the way to 600. There's also lots of controversy over segregated witness, and I don't think that is going to end well. It doesn't look like neither Roger nor via BTC, nor a lot of other big blockers are backing down in any way. So this debate will heat up. And if you look, you see the MACD has turned and is trending down. Once the RSI crosses below 50, that might not be all that great for Bitcoin. Of course, I would love to see it come back down and hit another oversold condition. Look, Bitcoin goes back and forth. I mean, we've moved from about $200 just, yeah, over a year ago, about a year and a half ago now, almost a year and a half ago. So that's been a big move. And I understand that the reward's been cut in half and Bitcoin is useful, but this debate might get ugly and it might get worse before it gets better. So if we break out above 760 with strength, I will go back to being bullish Bitcoin. For now, I'm still looking for a bit of a pullback. For a price in real time, this is Bitstamp. I guess we're back above 730 at the moment. I will be, let me just double check on my phone real quick. Yeah, we're at 729.50 right now. And we're right at the bottom of this channel. Of course, I've been expecting Bitcoin to break out for quite some time. These are general arrows; they're not, specific arrows. So I guess longer term, we're below my expectations by this point. We are at the bottom of the channel. It really doesn't make sense for me to say that we're going to 650. Maybe it's more wishful thinking. I would love to see it lower so I can maybe buy a few more Bitcoins. Obviously, I'm very, very bullish long term. Look, we're really struggling with this Fibonacci line. It's my 38% Fibonacci line. I have no idea where this is from. I would have to really move this chart. Okay, so it looks like this Fibonacci line is from the all-time high to the Silk Road closure. These Fibonacci lines have been on this chart for at least 3 years, and look, they're still relevant. So that looks like a significant Fibonacci line. If we can break above it, there's absolutely no resistance until 1200 in my view, and that's the all-time high. So once we break out with some conviction, maybe because of a catalyst, things would look good. Meanwhile, look at the RSI. We are way below. Look at the MACD, not RSI. We are way below, so that's trending down. The price made a lower high, and the upward trending trend line on the RSI, we've fallen below it, we've come back, we've touched it from below, and now we're going back down. I don't really want to see this channel break to the downside. The channel has been nice and clean for over a year, but if we break slightly below this channel and go down $100, it's not the end of the world. We have another Fibonacci holding things up right here at 629. Okay, so those are my thoughts on all of the markets. I really wanted to make this video on the shorter side. That didn't work. There are live viewers. Let me take a look and see if there's any questions. I got a question. Via BTC and Bitcoin.com are the two pools planning on fighting segregated witness, but they're saying there are others. Do you know who others are? I do not. I mean, there was that announcement by Via BTC that Ant Pool would be supporting would be supporting Bitcoin Unlimited. Ant Pool, of course, I believe it's the biggest mining pool. If not, then it's the second biggest mining pool. And I don't think Ant Pool will. I really, really don't. That would be that would be a disaster. If Ant Pool does come out and say that they're supporting Bitcoin Unlimited, I can certainly see like $100 to $200 drop in price. And maybe that would change their mind because all of their users in that pool would probably leave because they would immediately see loss of revenue. Look, guys, Bitcoin Unlimited can't win. I mean, for as much influence as Roger has, they have what, 6% of the network now? They can get their support to 10% maybe. How in the world do they think they're going to get 95% consensus if they're fighting at a 10% clip right now? And if they think they're going to change anything with less than 75% consensus, even 75% consensus, you're going to have an Ethereum situation on your hands when it's split into two forks. And it's completely stupid. I don't know why they're still fighting. And I don't know, maybe they like keeping Bitcoin down. I have no idea, but the price is going up. So maybe them fighting it and the price continues to rise. Maybe they think they're doing a good thing and they're becoming richer. Of course, if the price of Bitcoin goes up and Roger Ver is one of the big holders, it gives him more money to continue to fight Bitcoin Core. And it's just going to end badly. The only chance for Bitcoin to scale is for segregated witness to get 95% consensus, and then we can get back to actually scaling, because we really need transaction malleability to be solved and to pave the way for off-chain scaling. So that's about it. I don't see who else is joining them other than I know people that are still friends of mine, I'm assuming, but I don't understand why they're suddenly become big blockers. So it's just a lot of talk as far as those with power to do something about it. It's pretty much just Roger. I have no idea where YBTC came from. A lot of people suspect that this is all Roger. I don't know. I'm not going to speculate. And the ant pool, that's just speculation. Ant pool hasn't actually come out and said anything yet. Yeah, I guess that's it. Any other questions? Okay, got another question. Why would the big blockers support segregated witness and then go for big blocks on the next future update? Wouldn't that be the best interest of Bitcoin? Well, that's the thing, right? Like the big blockers, they have to understand by now that the core team has pretty much agreed to increase the block size to 2 megabytes and up to 4 megabytes after segregated witness gets into place. It's not about bigger blocks, in my opinion, for the big blockers. It's about them having control of Bitcoin development. They, for some reason, think that Blockstream is this evil entity that is trying to hijack Bitcoin, where, in my opinion, nothing can be further from the truth. These are some of the smartest people, some of the smartest developers, and they are very privacy conscious. They want privacy, they want security, and I don't see anyone else. I mean, I wouldn't put Gavin in this list of people. I wouldn't put Mike Hearn in this list of people. I wouldn't put the Tuman brothers in this list of people. God forbid Peter R. gets a chance to do anything. That's another insanity. So there are very, very few people that I trust not to be compromised by their crazy thoughts or, people with guns. And the people at Blockstream, I consider them in that bunch of people that I don't believe are compromised, and these people would rather quit than be compromised. And I can't say that about anybody else that the big blockers would put in front of us to be responsible for making Bitcoin commits to Bitcoin code. So I think it's ridiculous. But at this point, they are so invested in the insanity they've been pitching that they really can't back down. It really becomes, one of those macho things. So we have, it is what it is. Maybe if Bitcoin dropped $300 or $400, they would give in and go into SegWit. But my guess is no matter what happens, if Bitcoin continues to go up in price, they will have the money to fight a segregated witness. And if Bitcoin drops in price a lot, they will blame the core team that it was their fault by not giving in to a 10% minority. I know that sounds insane, but it's no different than what's currently been said from that side. Again, I hope this blows over soon, but it won't. So we're going to be dealing with this for at least the next 3 to 6 months. Another question. People base their assumed value for a Bitcoin as 600. That's the cost of mining 1 Bitcoin. Do you see the cost of mining increase in the near future? So I don't know what the cost of mining Bitcoin is. I really, really don't. For some, it could be $600 a Bitcoin. For some, it could be $300 a Bitcoin. I don't really know what the cost of mining Bitcoin is. It's very, very different based on where your mine is. I recently, on another podcast, I speculated that in the future, I can see mining at no reward. I can see mining at a loss. I can see companies willing to lose 20, 30, $40 million a year mining Bitcoin for free, as long as their core business is making them $1 billion during the year and they need Bitcoin. Feel free to speculate on what those companies might be. So it's hard to say. I mean, I expected hash power to drop a little bit. I expected miners to drop out after the halving. It doesn't look like that's happening. So that tells me that all of these assumptions pre-halving of how expensive mining is have been wrong, and mining might be cheaper than most people thought. I mean, Bitcoin was just $200 a year ago, maybe 300 a year ago, and they were surviving just fine. I mean, you assume you would double that price, but who knows? If miners are smart, they are trying to use as much fiat as they can, holding on to that Bitcoin, waiting for it to go up. Why trigger segregated witness at 95% and not lower? Why the need for such a broad consensus? That's a good question. I would love to see 95% consensus because it guarantees there won't be a hard fork. Hard forks are very dangerous. Of course, I personally believe that they will push segregated witness in at a lower than 95% consensus, mostly because some people are lazy and they're just not going to update and they're not going to vote. I would say that once YBTC mining pool is no longer relevant or has less than 2% of the hash rate, and there is 85 to 90% compliance on segregated witness, in my opinion, that would be enough to get it in. But I do like the 95% threshold. And like Dr. Beck said, we can wait. He doesn't mind waiting. Things seem to be stable. Price is doing okay. He doesn't mind running segregated witness in testnet for as long as humanly possible to make sure nothing goes wrong when it goes live. So that's the reason for that. What do you think about Chancellor Gao and him saying Bitcoin needs to go to 10,000 USD, then 1 million, then all of GDP? I don't really pay attention much to what Chandler Gao says. Bitcoin doesn't need to do anything. Bitcoin will do what the market allows it to do. I would love to see Bitcoin at 10,000, but not tomorrow. That would cause unbelievable stress on the network that probably can't handle it. I might have some money for a change if Bitcoin goes to 10,000, but you know what? I will forgo my selfish desires for the time being. Will the Indian currency demonetization have big effects on Bitcoin or the dollar? I don't think the Indian currency demonetization will have big effects. Matthew, who asked the question, I recommend going to the World Crypto Network. We just did a video. I talked about India in detail just this past Friday. So check out the Bitcoin group, episode 117. I will update my blog probably in the next few hours, and it will be the first thing in my blog as well. I've updated it on all the previous videos, but not that one. All right, guys, this video has gone long enough. I will call it a night. Let me see if our FinWiz page has normalized before other people start to panic. And did they fix their bugs? They have not. So check this out. And I found this. I find this kind of funny, but not to those that have positions that may be seeing this and either get scared or very happy. All right, guys. On that note, have a good night. Have a good. Well, the weekend is over. Enjoy your Thanksgiving. Take a break from trading. This is the perfect week to do so.